Okay. Thank you, everyone. We have two more companies to go. I know it's a long day. It's hard being an investor, but someone's got to do it. It's hard being rich. All right. So CM Blue. So CM Blue is a battery technology company. So there's a lot of problems with lithium batteries. Um, Disposal, mining, all sorts of things. Peak lithium is like a thing people are talking about now. We haven't even hit peak oil, and now we're already talking about peak lithium. There's not enough lithium in the world to make all the batteries we need to replace all the stuff they're supposed to. So the solution is solid flow batteries. So this is some electrochemic chemistry, and again, we talked about how much information should you tell. Like, this is okay. Like, this is pretty technical, right? And they know what the product is, but you're still not giving them all the details. They can't replicate this. So you don't have to be totally secret all the time. So basically, instead of lithium, there's kind of this salts, and the salts flowing around, and that's your battery. So there's a number of different types of batteries that are out there. Here's your kind of competitor matrix situation, right? So lithium ion batteries, good performance, low cost, limited availability. There's some scalability, but they're ready to go on the market. That's what most batteries are. Here are some of the competitors, but there are also some other types of batteries. There's inorganic redox flow batteries, which is like like sodium, liquid sodium batteries. There's also organic flow batteries. I don't know the types of molecules they use, but I don't know, small carbon based aromatics. Okay, so liquid aromatics. Okay. But it's they're high performance, but they're not really scalable yet. And but they use abundant materials instead of limited lithium. So probably at some point we'll switch from lithium to flow batteries. Which one becomes the winner or both remains to be seen. But again, like, even though lithium hasn't even fully penetrated the market, people are still thinking about what's coming next, right? Because these companies, 5, 7 years, 10, it takes 5 to 10 years to build a new company that creates value. So 10 years from now, what type of batteries are we going to be using? Probably something besides lithium. So here's your competitive landscape. This is your 4x4. They have good performance or low performance to high performance, environmentally harmful to environmentally safe. And like all good entrepreneurs, ours is always the best. And here's the market size. Okay, we talked about market sizing. You don't know these terms, but these are very common in the startup world. Every single pitch deck you see that gets investment will have this slide, which is your total addressable market slide. It typically looks like an onion here. So I'm going to run through the layers of the onion so you know what it means and how they're communicating the market to potential investors for your product. So the total addressable market for all batteries, large and advanced batteries in the world, is $200 billion. That's a pretty big market, but you're not going to get all that for a number of reasons, right? Some are already deployed, there's long-term contracts, doesn't make sense in some places, etc. So we got to slice that down. So of that 200 billion, we think we can only service 30 billion of that, which is the stationary long duration storage. Okay? So stationary means not in cars. Long duration means like, multiple days rather than several hours or minutes. And storage, which is where you put stuff you want later. Okay. So then, but of that 30 billion of stationary long duration storage, what we're actually going to obtain is 1.5 billion, which is looks like 0.5% of that market globally. But if we get that, that's $1.5 billion in revenue. Pretty attractive company. All right, so we've had some really successful demonstrations already. We've worked with Mercedes-Benz and the Department of Energy, Strabag, which is a big German construction company. Austrian construction company. So, like, instead of diesel generators on their construction sites for lights and stuff like that, they're using these kind of organic flow batteries. Super cool. And some of these other energy companies, which, if you're in the space, you probably know what they are. Here's the team. So, we have a CEO. He looks kind of businessy. He's worked at these companies, none of which I really know, although Casper, I know they're a company that sells mattresses online. So this guy's probably not the technical battery expert. He's the business guy. Next, you have the CTO, Doctor. Hmm? So she's a PhD, and she probably teaches at this university here and founded this company. But again, partnered with someone who had done multiple businesses and could handle that end to work on scaling the technology. And then we have a chief financial officer who worked at a number of probably financial firms so she could package it. There's also a number of board members. Um, I don't know who these people are, but it would have been cool to see what their affiliations were too. So, okay, so he's the founder. Okay, oh, so that's a good point. Thank you for that. So, none of the actual operators of the company are the creators of the technology. So some people are just entrepreneurs, right? And again, you might think, oh wow, this might be good in another sector. You see this. It's a mind, it's a skill set that you can transfer some innovations from one sector to another. You don't necessarily even have to be an expert to do super technical companies. So here's their timeline. It was founded in 2014. They partnered with the labs, national labs. They had a demonstration project at an actual power plant, so that's good. Strawbog invested 106 million. Pretty big investment, right? You don't get that kind of size investment when you don't have customers or when you haven't demonstrated your technologies at scale. There's some pilot projects in the US. And so now we're raising money to basically do some more commercial. Well, actually, we just hit our 100 million in revenue. So that's a big deal. These guys are no joke. But now next year, they're going to do a new manufacturing facility. They're going to expand into Asia and Latin America. Maybe if we invest in them, we could convince them to expand into Indonesia. And then they're going to capture 15% of the market share by 2028. And then by 2029, they're going to get 500 million in revenue. It's a great investment. 5x the revenue, 5 times the revenue in 4 years is the goal. So actually, and then the other piece of information here is they're requesting $500 million. It's a big investment. I hope your fund writes checks, big checks. Okay. Typically, when investors come into a company, companies will sell no more than 25% of their company each time. Okay, so each round, they'll sell 20 to 25% of the company. You can do that multiple times. It just ends up what's called diluting. So the founders may start with 50, but by the time 50% each, if you have two people, but by the time you actually get to this size, the founders might only have 5 or 10% of the company or less. And that's fine, right? Because I don't need to own 50%. I'm fine owning 1%, right? Because if they're requesting a $500 million investment, and typically you could assume 20% of the company gets sold, how much would the company be worth? Hmm? Someone who hasn't answered. This is an easier question. 2.5 billion. Okay. So they're saying their company right now is worth 2.5 billion. And and that would be what's called the post money valuation. Don't need to worry about that, but typically you have a pre-money valuation, which is how much your company's worth before, then the money comes in, and you have a post-money valuation. So that would be a $2.5 billion post-money valuation. So as a side note, a lot of early founders or first time founders will be like, I don't want investors to come in because then I won't own half the company. I'll only own 20%. Next time that, oh my gosh, investors come in, I only own 8%. Next time they come in, I only own 1%. However, if their money allowed me to make 100 million in revenue and get valued at $2.5 billion, if what would 1% of $2.5 billion be? That's math, that's science stuff. No one? Come on. 1% of 2.5 billion. 2.5 E9 times point. Yeah. Okay. 250 million, I think. Is that right? Hmm? No? 25 million. Okay. So that's not that much money, right? Relative to the size of the company, but $25 million is a pretty good salary for a company that's been around, right? Say you started working in 2021 on this project, you end up owning 1% of the company. You're now it's $25 million, right? You just made 5 million a year. You don't have that in cash, but the point being is don't worry about selling your company, right? Don't worry about taking investment because 1% of a $2 billion company is a lot better than 50% of a company worth $0. And you need money to grow. Okay. You might get investment from venture, you might get investment from the bank, doesn't matter. But like, don't be afraid to take money and lose ownership if that's what you need for your business to grow. A lot of founders wait too long, they don't want to sell, and then they end up not having enough cash, not having enough runway to actually get to the scale where then they can get acquired and actually exit the company. So that is CM Blue. Questions, comments, discussion, organic flow batteries, attractive growing market.
We need request, personal request like that in enterprise. It's enterprise we need uh, can before this.
I can't go back.
I just want to know how they won the request of 500 millions investment. Why they want to request the investment 500 millions.
Why?
Why?
Yeah, so they want to do that because they want to build a new manufacturing facility. So they want to scale up production, probably costs 300 million to build that. And then they want to expand into Asia and Latin America.
It means it's already a big deal. They get revenue
Mhm.
100 million.
Yeah, but revenue isn't profit. Revenue isn't free cash flow, right?
Yeah.
Of that $100 million they're making, right? They're probably spending all of it. They might even be spending more. They might be spending 150 million a year.
Oh, because it could be their risk also can coming to if you want to invest 500 millions.
Oh, there's risk.
Yeah, there's risk.
There's always risk. There's risk you're going to burn all that cash and get sued and go bankrupt, and it happens all the time in business, right? But you need that money to deploy the technology, right? We can't scale this globally without this investment. So
Get the revenue 100 million. It's big deal. We sell.
if someone wants to buy,
Yeah.
to sell your company, you have to find someone that wants to buy it, right? And you have to say, yes, we want to sell this. The founders may be getting offers to sell their company already. And they're saying, why would we sell? We'll just take more money and get bigger. Look at OpenAI. OpenAI is a great company. Third most expensive company in the world, private company in the world. I think they're worth around, actually, they just got a huge new investment round. But I think they're I think they just got like $8 billion in investment. Okay. So they're worth around $300 billion. So they could have sold the company, right? But they didn't. And why didn't they? Right? They believe they can get bigger. They don't need to sell, right? So CM Blue is saying, look, we can take more money, we can scale, we can get bigger, we can deploy this technology all over the world. We can get to $500 million in 5 years. At that point, when I'm making $500 million, my company's not worth two and a half billion anymore. It's like worth 25 billion. So me as the founder with 1%, I say let's shoot the moon, let's go for it, you know? Other questions? CM Blue. Oh, we got one in the back. Oh, two in the back. Yes.
Hello. I think my question will sound stupid. So I'm trying to make sense about all of this. I'm very unfamiliar with business. So from these milestones, what I'm trying to understand is that currently the company uh, project that on 2030 they will have revenue of $1 billion,
Yeah,
like that.
500 million
Oh,
revenue by 2029.
500 million revenue. But currently, the company is still a pilot project, so they don't have revenue.
Well, so they made $100 million. They're going to basically right in 2025 they'll hit 100 million in
Or
revenue.
based on that, they request $500 million of investment.
Yes.
Okay. And now I want to ask the beginning of the CM Blue, when CM Blue founded from 2014 to 2021. They were doing only research. I mean, lab scale of organic organic redox flow,
Yes.
and then argon. Uh, what is it? Argon partner with uh, the CM Blue, and then they believe that CM Blue, uh, the organic redox flow would work like that, and then and then
So then they had a pilot
and
project
then they have a pilot project, and now
at a power plant.
and power plant. That's why currently they are going to have a revenue of $100 million.
Yes.
Oh,
Yeah. So I don't know exactly how many power plants they have, et cetera, but they have pilot projects in the US. So these pilot projects are generating revenue.
okay.
So this was the research phase. Okay.
Yeah.
They started it here. It took 7 years before they could make a partnership with these national laboratories.
Mm.
So this is I don't actually know if I should be touching this. Um, so this is like you could think about this is the global green chem program right here, right? So it's a government funded partnership, public private partnership, and now like they're helping to scale the technology, prove it, test it, and then after that, they then did a pilot project with a commercial with a power plant to
Yes.
demonstrate their project on site. When that happened, then Mercedes Benz saw that and they said, we want to do that because we have net zero targets, right? Remember, corporates have targets, they're looking for this. And then when Mercedes Benz did a pilot project with them, this company said, this is going to work. Let's put $100 million in as an investment. And then with that investment, they then went and did even more pilot projects in the US, right? So they've
Okay.
demonstrated their technology, with the U.S. government, with one market segment, which is power plants. The other is in the vehicle or production. So, and then they have more pilots, right? So, wide variety of applications that have been demonstrated commercially generating revenue.
Okay. So based on that, they determine how much money they request from the investor, uh, based on the revenue they want, the target revenue on the next 5 years, like that.
Yeah,
Is that
exactly.
is that the formula in business or
Yes, exactly it.
uh,
Okay, so um, so uh, compa-
pokoknya 5
there's public companies and there's private companies. All of these companies are private. Okay. And what that means, it doesn't mean that they're secret. It means that you can't buy and sell the stock in the company on a public exchange. What it means is that only kind of wealthy investors like can invest in it at the choice of the company. And um, then so an investor comes in, they say, okay, we're going to take your money and now we're going to sell some more products. Okay, after a few years, we're now making 10 million in revenue. Okay, so typically then you say, okay, we want to raise more money to grow. Um, you go to a different investor and you say, we made 10 million in revenue. Sometimes investors will value a company based on like the revenue multiple, right? Like what we saw for Air Company. So maybe 5 times or 10 times if it's really hot, but like somewhere between 5 to 10. So, okay, if I made $10 million, a quick back of the envelope estimate for a valuation would be 50 million, right? So if my valuation now is a 5 times revenue multiple, it's $50 million. And then I would say, okay, I want to sell 20% of my company. So then I would say, I want 10 million in investment, right? So then my pre-money valuation would be 50 million, which is a 5x multiple from the revenue. And then my post-money valuation would be 60 million because I then got that cash.
okay, I got that now.
Yeah.
Thank you.
Okay. That wasn't a dumb question, by the way. That was a great question.
Okay, thank you.
There was a hand over here.
Okay. In business, we have a roadmap, and the goal of a business project is on time, on budget, on scope, and on result. Yeah, but in business and investment, there will be a risk. And we know uh, theory in investment, high risk, high return. So the question is, so how can the investor minimize the risk and maximize the result? Yeah.
That's a good question. Um, remember earlier I was talking about the different types of money, right? That had different return expectations. So um, a deeper question, right, is like, why why do you even get a return as an investor, right? And the question, you get a return because you have a risk of losing your money, right? Of it not working, of not being on scope or time or budget, right? There's a lot of bad bets that are made to just pick on the vulnerable person in the back who lost 1 million on his startup. Happens all the time. It's okay. But like investors put money in there, right? And that's risk. They risked losing their money and they lost it, right? Well, that's why venture capital expects 30% returns because they know half their investments are going to be gone. So your question is really more about what type of investor am I? How much am I willing to lose? And as a result of how much you're willing to lose, that is related to how much you could gain. And this is typically called the risk return curve. Or it's also called what is it called? Like the efficient frontier, right? So I can invest in U.S. Treasury bonds, which is considered the safest investment in the world. The U.S. government, the most was the credit worthy entity, not anymore. But I invest in U.S. Treasury bonds. I get 4.5%. So that's like my lowest risk type of investment, right? I could invest maybe in commercial debt. Okay, now that's 8% because companies could go bankrupt, or I could invest in venture, right? Venture has a very high chance of failing. So then you get a very high reward. So as an investor, say you're like, okay, I have other people's money. I'm happy to invest it. But I want to reduce my risk, right? You're an investor in an investment committee right now evaluating low carbon investments. You are doing what is called due diligence. So assuming the asset that this company is in your investment thesis as a fund, then you have to do the due diligence, right? You have to look at all these, I mentioned the data room, right? The data room is all their legal contracts, all their employment contracts, all their supplier contracts, all their pilot projects, all the paperwork. And before I invest, because that's not one $500 million or $500 million investment. That'll probably be like 5 people, 5 investment funds. Minimum check, maybe 50 million. Okay. Before I invest my 50 million into this company, like I'm going to read every single word of every single legal contract that they have. And I'm going to ask them really detailed questions about that. When they're saying we're going to expand into Asia and Latin America, I'm going to say, where are your contracts? Where are your memorandums of understanding? Do you have any pre-existing relationships? And you'll do all of that work. And then you'll have to make a decision as an investor. Are those answers good enough for me? And you can do all the due diligence in the world, but a lot of the time, it just comes, especially in early stage investing, it just comes down to, do I think this is going to work or not? I don't know. At a certain point, it's like did that answer your question or do you have a follow up?
Yeah, I have a follow-up question. Uh, we do legal due diligence and we also mitigate it in our legal contract, but uh, in the project, uh, when it's running, there will be a risk that out of prediction. But our goal is, yeah, back again on time, on budget, on scope, and on result. Um, yeah, how can it works gitu? How can it works?
Yeah. So okay, let's say we do make the investment, right? Even if we make the investment, we're going to say we want a board seat. Okay. So we want statements every month, all right, on how you're spending your money. And we're going to look at those statements every month when you're building your new pilot project. We're going to see if it's not on schedule. And if it's not on schedule, I'm going to call you up and I'm going to say, hey, look, what's going on here? And if it gets to a certain point, maybe they spend 20% more for 2 quarters. Now it's at a serious risk. And so now I might call a board meeting and I might say, you have to change what you're doing or we're going to replace you with someone who can. So there's a lot of ways investors, once they make the investment, can influence the direction of a company. They can't influence like a lot of the small things, but they can replace the CEO, for example, right? They could make them take new debt. They could even in some cases cancel contracts. They won't get involved in like the micro operations, but on really big things, that's one way investors reduce risks is by taking a board seat in the company and steering the strategy.
Okay. So, monitoring and evaluation is important things in investor, right?
Yes.
Okay.
Yeah, absolutely. And also, like, they're going to use whatever powers they have to make sure that it works. They're not going to be passive, especially if they're putting that kind of money in. Like, did you have any when you took your? Can we transfer to this guy? Did you have any external? Can someone run the mic over? When you got your investments, did any of your investors join your board?
Of course.
And what was that experience like having external investors on your board?
And it's in, well, I mean, definitely they handle the finance part.
Okay.
I mean, that's the normal things that they do, and they look at how we actually run the money. Do we spend it on lifestyle, those kind of things, pretty strict. So I mean, like, if you wanna take an investment, you better make sure it runs well first.
And was there an instance maybe in one of the board meetings where they took a very strong position to advocate you doing something different than you were currently doing with your company?
Well, I mean, to start with, they said that
that they only want to be passive
Oh,
investors,
that's lucky.
you know. But along the way, when the product is not completely done, or from their perspective is not perfect, you know, they know that there's a challenge within uh, the board of directors, so they pull the plug.
Yeah.
Yeah, so
Okay.
that's what happens.
Sometimes what happens, right? Because risk is super interesting, and investment risk is a super interesting area. That's my actual major interest, is quantifying, estimating, simulating risk. That's what I really like to do. This is where the big money is made and lost in the global markets. So you answer that question, you'll be a billionaire, right? You answer it well. You answer it okay, you'll still make tens of millions of dollars. Okay, but there's different ways. There's different types of risks. You mentioned operational risk, legal risk, but there's also like different types of risks. And so maybe what you could do is you could look at a document that's called a prospectus. So if you Google example prospectus, prospectus is when companies offer investments to the public. You can look at a prospectus from Apple, for example. They raised about $2 billion during COVID at like 0.5% interest, which fantastic deal. Taking advantage of the global downturn in interest rates, savvy business. Okay. But in their prospectus and in every single company's prospectus around the world, there's the longest section will be risks, because the risks are the questions that investors ask. What happens if the US, what happens, political risk? What happens if Trump gets elected? Okay, so that'll be one of the listed risks. And then they'll have a thing of, we're mitigating this risk by having an alternative strategy to expand into Europe rather than North America, right? So in the prospectus, you'll see lists of 50 pages of risks and how they attempt to mitigate it. But again, there's no such thing as a sure thing, right? And even the best bets can lose money for reasons totally outside of your control. And if you want a really good read on this, if you're really interested in this subject, The Black Swan is a book by Nicholas Nassim Taleb, and it's all about quantifying financial risk, and it's really readable too. It's a great read, really cool. It's all about, it's called The Impact of the Highly Improbable. Okay. And it comes from, sorry, I'm on a tangent now, and then we'll switch, but it comes from this idea of uh, in Europe, people thought that swans were white. Okay. And they said, there's no way that there can be a black swan. Okay. And it became this myth, a saying, right? And then they went to Australia, and there was all the swans were black. Okay. Totally unforeseeable. Okay. But this became a term that said the black swan is an unpredictable event that is guaranteed to happen. Okay. You don't know when, but you know that at some point a hurricane is going to strike. You don't know when. You can't really predict it 2 months in advance, but you know it's going to happen. So how do you plan for that? Right. And he has a ton of very interesting statistics behind his work. He was a quantitative finance guy, but this book is very readable and has a lot of really, really nice stories about it. Do I want to say anything else about that? Probably yes, but we'll go on from there. Yeah, risk is a very interesting thing. No such thing as a free lunch. Can't get rid of entropy. All right. Okay. Oh, actually, yeah. One point I'll make. So in that book, which is a valuable lesson, he talks about exposure to risk. And most people think risk is a bad thing. And it is the risk of losing your money, but you also have the risk of gaining your money, right? And you don't really know when or what is going to happen. However, if you don't take the risk, you can't benefit from the upside, right? So you have to expose yourself to risk in order to actually benefit. And the example with he gave on a personal level was falling in love is a black swan, because you don't, hopefully it's going to happen to everyone. I think it will, right? We can open our hearts, etc. But you can't predict when it's going to happen. right? One day you just kind of meet someone somewhere, you don't know where, you don't know when, but that's like almost a sure bet. How are you going to predict that? How do you decide how to live? Well, if you stay at home, you're probably not going to bump into that person. And it's just like that in business. You have to expose yourself to risk to benefit from these extreme upsides, um, and accept that you'll lose sometimes or a lot. Okay, that was a little bit of a tangent, but it's a subject I really like. Okay, all right. Next one, haptic. Okay, last one. Hard being in the investment committee, right? This is what investors do. It's like it's tough, right? Everything's hard in its own way, you know. So grass is always greener. Uh, typical investment committee meeting will be 8 hours, and they'll do this with 10 companies, and it'll be way more in depth than this. Yeah. All right. So Paptic. Paptic is this is my favorite buzzword soup. A bio-based, recyclable, reusable, biodegradable, next generation packaging material made out of renewable raw materials. So it talks about, you can see what it is. So this is a good example. It immediately makes it tangible in the investor's mind. It's like bags, shopping bags, and different types of shipping things, and some, looks like some like cake mix. All right. So here's the problem that they're trying to fix. The problem is our planet is choking on plastic. And I love this slide. I think it's really beautiful, because it says the problem without saying anything, right? This is great slide deck making. Much better than my slides with a lot of text. Okay. So Haptic is a flexible material made from wood fibers, and it serves a variety of applications. It ascribes to all these principles here. A lot of these are green chemistry related. Here's their competitor matrix. It's an alternative to plastic, but it meets the performance of the existing products. So you have a matrix with paper-like on one side, plastic-like on the other side, biodegradable, recyclable, reusable. Here are some of the competitors. And Haptic, like all good entrepreneurs, it's always on the upper right. So Haptic outperforms all of its competitors. Here's their market share chart. So they started in 2018. This says actuals, right? So they're reporting on their actual financials. Remember, we talked about companies that made projections and then actuals, and you show them and how close you were. So this is their plan. This is the gray number is the year-over-year percent growth. And this is revenue in hundreds of millions of dollars. So 650, 92, 272, 332%. They're starting to make money here. So they've made some revenue in 2022. And then they say they're going to triple their revenue for 2 years, double it, and then kind of grow like this. So by 2030, they expect to be making 800 million, let's say 800 million in revenue. So by 2030, let's assume it's a 5x revenue multiple. That could be a $4 billion company, right? So it might be a deal to invest like 10 million today if I believe these revenue projections and their ability to operationally capture that market for the next few years. Here's the management team. They're equipped with commercial and technical experience necessary to drive scalable and continued innovation. And I really like this because I know why they're asking for investment. They're asking for investment because they spent all their money on this really expensive designer couch. Yep. And so all of their pictures are on this couch, except this guy, Yako. Yako's the CFO. He doesn't ever sit on the couch. He's typing, he's making the projections and the balance sheets and the income statements. Okay. But what's missing here is any affiliation to any other, like this doesn't really tell me anything, right? Which companies have these people worked at? What schools have they gone to? Anything, right? So this doesn't really add much to me as an investor in this particular pitch deck. And I'd want to look in their data room and look at all the CVs of all the employees, or at least the executive team, to see if they have the experience to actually achieve that market. Okay, so invest in Paptic to be a part of addressing one of the largest environmental concerns, climate change and plastic waste. So they don't really tell you how much they want. They might not be fundraising. That's okay. But that's their pitch deck. That's Paptic, which is kind of like in between size, like kind of like maybe a little smaller than Air Company, but bigger than Banofi leather. So before I open it up to questions about Paptic, I wanted to show you. So this is from Banofi leather. You can pass this around, but I do want it back because I like it. This is made from banana leathers. Okay, so you can see and inspect the performance. Okay, and I'll do this. This is Air Company perfume. So this liquid was made by CO2, right? And if I was pitching investors, a really good thing you can ever do if you pitch investors and you have a product, if you're giving a pitch, you say, and here's our product, look at this, right? While you're pitching, right? It makes it really real, okay? So you can pass that around too if you want. It's really just perfume, but it is kind of cool to think about it, that this was air, right? Like that's cool. That's just cool. It really brings it home. All right, so so that was Paptic. Questions, discussions on Paptic. Who are the people that haven't asked questions? Yeah? All right, few questions. Who hasn't? Oh, who was the really shy person that was trying to oh.
Have to break the news to you. Every carbon around you was air at some point.
I know. But, look, we're all made of star stuff, okay, and all this. But, a lot of investors don't realize this stuff, right? You have to remember, it's not quite common knowledge. And it really does demonstrate that this product, like, was made. It's real. It's not just an idea in a lab, right? But yes, everything is made from carbon. We all come from the sun and, all this. All right, questions on Paptic. Thank you. Again, questions. Any questions on Paptic? Who is the really shy person that didn't want to ask a question? No?
I think Pagade has a
Oh,
question.
great. Great. Yeah?
Apakah ada pertanyaan?
No? No questions? Okay. We can also go on. I'm just going to take a little photo. Could everyone just look at me for a sec? Because I just want to, yeah? Okay, great. Thank you. Okay, great. All right, so no questions on Paptic? Not really? Packaging?
Oh, maybe I do have a
Oh,
question.
yes, thank you.
For the previous one, the
Yeah,
battery
CM
one.
Blue.
Yeah,
Yeah.
CM Blue. Like for Paptic, it's clear, right? Like why do they want to produce like plastic goods? I mean like more sustainable packaging. But for CM Blue, why do they choose to use organic batteries, solid state batteries, if I'm not mistaken, instead of just using lithium batteries? Because it has been proven to be energy efficient, it has proven to have a higher energy density, and with the life cycles, why do they opt for organic batteries?
Yeah, it's a good question. And it's like funny to think about, right? Because like lithium is already a replacement for gas, but like we also will need a replacement for lithium, right? We can't fly planes with lithium batteries. We can, well, there's some actually. I was looking, Elysium Air. They have an electric plane with lithium batteries, but like there's not actually enough lithium in the world to to actually convert all of the cars on Earth right now. So like we're already going to run out of lithium. We know it at some point. It doesn't mean that lithium isn't going to scale up, but CM Blue isn't interested in capturing the what is left of the lithium market. They're interested in what is available after that. Yeah, and they believe they can actually achieve much cheaper than lithium, higher energy density, and all sorts of other things. That do you want to add anything else? Hmm? Sure. Sure.
So it's all patented, but it seems to be that CM Blue's energy storage material is actually based on lignin, which is a renewable resource from trees. So that's number one. And then their focus is on the scalability of their technology. So since it's a liquid energy carrier, you can, in theory, scale it up really massively. And especially if you go into countries that are heavily reliant on solar energy or wind energy, you will always have moments where you have overproduction and underproduction. So that's a really good method to store energy in a wind intensive day where you don't have enough consumption of energy, and then you can just fill that thing up and use that energy in an energy grid in a small community or in a small city or something like that.
Okay. Thank you, Lars. Thank you for your questions. Okay. So now the time has come. All right. You're investors. You've been taking notes. We looked at 5 companies. Okay. 5 companies. We looked at Air Company. We looked at Haptic. We looked at CM Blue. We looked at Banofi Leather. And we looked at Sublime Systems. They're all different sizes, they're different scale, different technologies, but they're all green chemistry derived companies that have gotten some investment. Okay. So now what we're going to do is we're going to vote on which one you all would invest in. Okay. We're going to vote. And we know the socially influenced phenomenon. Everyone wants to look around and making sure they're getting the right answer, right? So I'm going to ask everyone, I'm going to say the name. Everyone's going to close their eyes and you're going to raise your hand for the one you want to vote on, for the one you would invest in. Okay. And remember, you don't want to get the wrong investment because you don't want to lose your investors' money because then you lose your job. All right. So thank you for playing, everyone. If we could all just close our eyes, yeah, and vote, or at least pretend. First up, we have Air Company. Who would invest in Air Company?
Please close
Yep.
your eyes.
Yes, thank you. Okay, great. Up next, we have Banofi Leather. Okay. Okay. All right. After that, we have Paptic. Who would invest in Paptic? Okay. Oh, okay. Great. Oh, okay. All right. Then we have Sublime Systems. Okay. All right. And then we have, last but not least, CM Blue. Who would invest in CM Blue? Okay, that's all the votes. A lot of people didn't vote. But that's fine. That's fine. You don't have to invest. Right? Remember what I said earlier? Not every beautiful idea deserves investment. Right? That's a hard lesson to learn. But also, if you're an investor, you pass way more than you take. Okay? Typically, a fund may look at 100 or 150 companies before they invest in one. And those 100 or 150 companies they look at came from like 500 or 1,000 pitch decks. All right. So it's a really big funnel. It's hard to get investment. It's really hard. Okay. So the winners, it was close, but Nofi Leather. Okay. Followed by, it was the keychain that did it. See, you make it real. Yeah. Oh. Yes. See, you can smell it. See if it smells like bananas. Yeah. I know it is nice. I like it too. Yeah. Okay. Up next was Sublime Systems, followed by Paptic. We had a lot of quiet Paptic supporters in the room. Yeah, Paptic, followed by tied last place, Air Company and CM Blue. Hmm. Hmm. And what that tells me is this: Banofi Leather is an early stage company. A lot of risk, right? A lot of uncertainty, but you get a lot of upside, right? You get, when you invest early on, you get a bigger piece of a company that has a higher chance of failing, right? But if it makes it, you're going to get more money in the long run or a higher return. Okay, so that's everything I've prepared for you. However, we talked a lot about a number of topics. We talked about corporate sustainability strategy, global trends, how companies are navigating the green transition, different regulations. We talked about, from the bottom, if I have an idea, how do I evaluate an idea and assess if it could actually be attractive to some of these companies or that are trying to do the green transition? And then we went through how a number of green chemistry startups are presented in terms of pitches and the information they have or don't have. So I'm happy to answer questions or discussion on any of those topics or any other things that you're curious about in business, to the best of my ability. Okay. So, or we could all just go for a swim, also an option. But I want to extend that opportunity for discussion and questions. Maybe, is there Zoom? We haven't looked at the Zoom at all. Were there any comments or questions on the Zoom? I'd love to hear from someone who hasn't asked a question. Now's your chance to be brave. It's like hard to do with real investors, but it's like this is a safe space. Okay, we got uh-huh. Oh, no. Oh, someone said, "Hey, Hubert, thanks for saying compound annual growth." I don't know what those other ones say. I think it says thank you. All right. Okay, so no questions from online. Any questions in the room or comments? The interaction between business and science, global financial markets. Yeah.
Yeah, thank you, Mete. I'd like to try to have different point of view from there to here. uh, Sometimes we hear the term of angel investor or fund like that. But sometimes when I see the decision from them to invest, I think this doesn't make sense from the decision itself. It's uh, very overpriced in my mind. But I think they are much more or much smarter than me, of course. But when we see the fundamental analysis, financial report, etc., I think this doesn't make sense because they burn so much money and for years there is no profit, but still they decide and they say that this is a good decision for them. But I don't know. My question is, what is the perspective of angel investor or Ventura or like that to do investment, which I think this is not profitable because for years there is no, there is minus profit for them, but the investment is huge. What is
Yes.
their perspective about this decision?
It's a good question, which is what motivates angel investors to put money in, given the uh, amount of time it will take them to get money back and the potential risk of losing the money. So, first off, defining what an angel investor is. Okay. So, an angel investor is someone who has a decent amount of cash. Okay. Maybe they were a former entrepreneur. Maybe they inherited some money. Maybe they worked like at a tech company and they made like a few $1 million. Okay. So now these people are saying, well, what I want to do is I want to invest my money. Let's say I have $1 million to invest. Maybe I invest half of that in the stock market or government bonds, right? But the other half, like, hey, I know a lot about software. I was a software engineer. I'm gonna invest in software companies early on and take huge amounts of risk because I don't really care. Like, I don't really care about losing it, right? If $50,000 is a big check to you or me, but to someone with $1 million or $10 million, that might only be 1 or 2% of their investment portfolio. And they want to take that really high risk investment so that they have a potential really high upside. Okay. I think there was someone who invested $50,000 into Uber in their pre seed round. Okay. As an angel investor, that's worth like $300 million. So, if 50,000 is 100% of your investment, the money you have to invest, yeah, that's really risky. You shouldn't do that. But if it's 0.1% of your total portfolio and it's mixed together with debt and equity and public markets, I'll take a I'll take a 1% chance of turning that 50K into 10 million, right? And maybe I'll do that 100 times, right? I spend 5 million and, maybe a few of them hit and I end up getting 10 million, maybe in 5 or 10 years. Angel investors in general, like, take that kind of mentality, right? And they're not professional investors. They do due diligence, but it's almost like a hobby for them, right? It's a way for them to talk to interesting young people, to entrepreneurs, to stay abreast of what's going on. Maybe it's a way for uh, maybe the wife doesn't like the husband hanging out at the house all the time, and she says, go do something else. And that's how he spends his time. How about the That's a good point. There's a lot of very wealthy. So maybe the woman makes the money, and yeah, and the man says, "I actually like you going to work. Could you please find a new hobby for 4 hours a day?" And sure, you can play around with that money. Okay, so again, it's that's a lot different mentality than like a venture capital firm that is taking other people's money and has a certain expectation and limitations to that. Angel investors are investing their own money, right? So the risk profile is different and there's a lot more freedom they have, right? So maybe that answers your question a little bit. Yeah. Okay, other things people want to know about business, finance, capital markets, failure. Okay, well, could you put up my slide with my email and my phone number on here? Look, I hope all of you, if you do start a company, like, reach out. You can add me on LinkedIn, tell me about it. Like, I don't know. I'm happy to give some feedback or advice. And I really hope that some of you come to the hackathon. I hope that some of you maybe even apply to the accelerator, which will open up in April, or tell your friends if you know other people that are working on businesses. Maybe you know people who are working in different industries that want to be mentors, but this accelerator program is going to be really cool. It's around for 3 years. It's connected to a global network. And did I just do all that? I don't even think I have the laser anymore. Oh, here it is. And like I said, you don't have to be the CEO. You could just help found a company. You could get matchmaked. But either way, we all share the same goal, which is creating this vision of the world. And we might articulate it in different ways. Okay. Oops. Oh, sorry, it's not this one. We might articulate it in different ways, right? But I think it's like some sort of world where it's like super sustainable and we're not like creating plastic pollution and we're not destroying the rainforest and everyone has equal opportunities and all of these beautiful things. But we have to make that happen. We have to help make it happen. And one way to do that, Oops, it's the last slide, not this one, the one before. It's dark blue. But anyway, we have to make it happen, which means that we'll have to take some risk, and it's going to be hard. There's going to be a lot of failure, but it's very important right now that we all push really, really hard to make these ideas real, to convince people, and to present them in the ways that could be rapidly adopted. And like climate change, AI, all this stuff is happening, right? It's happening really, really fast. The world is changing a lot. And you have the ability to influence it with your science. So hopefully you do that. And I'm happy to help. And you should help everyone else. And we all got to do this together if we actually want to change these things that are like really, really bad. And we have to do it really fast. And whether or not you agree with capitalism or finance or have other problems, like right now, money like is the energy on how you change systems. So it's just one tool. And hopefully this lecture today showed you how you can use some of the existing language and frame your arguments in a way that is more acceptable for business so that we have a higher chance of making these things happen relatively quickly. So I guess I'll end there and I'll say I'd like to give a big shout out to the hosts. I know the students have been working very hard for many months. So I'm very appreciative of them. And our MC today also did a great job.
Thank you.
So I guess with that, I'll say Terima Kase for listening and happy to talk afterwards or in email or LinkedIn or whatever. Oh yeah, here's my info if you want to chat sometime. Yeah. Okay. Thank you. And I'm gonna get off stage now so we can end a little early. Yeah. Yeah. Is there anything? Yeah.
Thank you for this wonderful opportunity that we can have. I'm sorry. Yes, yes.
I just wanted to tell everybody that I'm going to be leaving tomorrow morning super early. So this is the last time that I see you. So if I'd be delighted to like have a chat with you, take a photo, exchange, whatever. I'm sure that this is only the beginning. I have already discussed with many of you about future plans. So definitely, I hope to be back. But I just wanted to really thank you all, the organizers, obviously, for an absolutely outstanding event, but also all of you for your generosity, your high spirit, your creativity, your ideas. It was my first time in Indonesia and Southeast Asia. I was absolutely blown away by it. Just your smiles. Thank you so much.
I'd like to say thank you to Matthew, Lars, and Audrey for this wonderful. How many days? Mondays, Monday, Tuesday, Wednesday, Thursday. 4 days. It's been 4 days. It's been 4 days with the insights from you guys. From It's been an amazing journey, and I'm sure that we all have gotten several new things that we like to implement in our research, in our studies, or maybe for our PhD. And today is about incorporating business in chemistry, which is me personally, I would not go into business. I would like to stick to the science side, but it's nice to know from the business side because we need these business people in order for our chemistry, in order for our compounds to actually be used in the real world.